Hi, my name is Leslie Hardy from Wellington Estates. We are a North Cyprus property development company, and I want to talk to you about the acquisition of Northern Rock by the Virgin Group and Richard Branson. I'm not going to dwell on the background of Northern Rock. There are many places you can read about that, including our own website, and I may just refer to Northern Rock's history in passing. But the deal essentially, as announced on the 17th of November 2011, comprises the following points. Firstly, Virgin and its backers will pay £747 million in cash for the shares of the bank, and these shares have been held in public ownership since 2008. Mr. Branson's financial colleague, Wilbur Ross, will be contributing some £260 million, while the Virgin Group will contribute a modest £50 million, together with another £50 million from Stanhope Capital, which is an Abu Dhabi wealth fund. So it's not quite clear where the constituents of this £747 million financial package are going to come from. Secondly, we need to look at what Mr. Branson and Virgin are specifically acquiring. And in order to do that, I do need to comment just for a moment on what has happened to Northern Rock since it was effectively nationalised by the UK government in 2008. Northern Rock plc was divided into two parts, and these are colloquially referred to as the good bank and the bad bank, which is reminiscent of a good cop and a bad cop. The good bank, as its name suggests, has investments and assets which are prudent and conservatively valued. The bad bank, on the other hand, has bad assets, or as they're now referred to, toxic assets, which again is a very colourful expression. And the bad bank and its debts and liabilities will remain in public ownership. The good bank is valued at around £1.2 billion sterling, and this is what Mr. Branson is purchasing. So, based on the difference between the valuation of the good bank and the price paid by Mr. Branson, the difference is some £450 million, i.e. Mr. Branson is buying it at a discount of some £450 million. Most commentators describe this as a loss to the UK taxpayer, and this represents around £15 for each UK taxpayer. As a sweetener to the UK government, Virgin will pay a further £80 million if the newly enlarged Virgin money is floated or sold within 5 years. This, I think, is an unlikely prospect in the current market conditions, and I would have thought Mr. Branson will try and improve the balance sheet of the bank, and possibly this may take him some 4 or 5 years. Also, the UK government will retain an interest in the business through a holding of some £150 million of Tier 1 capital notes, and these will convert into a stake of Virgin money should it be floated within 5 years, which, as I've said, is an unlikely prospect. So, what does Mr. Branson actually get with his purchase of £747 million? Well, he gets quite a lot. He gets some 75 high street branches, which I understand are mainly freehold properties in prime locations. There are around 1 million customers on the books of the good bank. There are some 2,000 employees. Whether you consider these an asset or a liability is a matter of some debate. It is likely their numbers will inevitably be pruned. And there's a mortgage book of some 14 billion. And this does not include any toxic assets. In other words, there are some good loans of 14 billion pounds secured on residential properties in the UK, and the customers are presumably paying or will pay Virgin something like 4% per annum, and that is good business. To make it even more attractive, there are also 16 billion of retail deposits on which most banks pay a derisory rate of interest, less than 1.5%, and from that is deducted tax. So in terms of the cash situation, he's got a mortgage book of 14 billion on which he's earning 4%, and he's got cash deposits of 16 billion on which he's actually paying something like 1.5%. So that seems a nice little earner for somebody like Mr. Branson. In the discussion of the matter, what most commentators don't explore or even note is the bad bank aspect of Northern Rock. And what the government did after it nationalised Northern Rock was split the assets of the bank into two. The mortgage assets, which were deemed to be prudent and conservative, were placed in the good bank, and there was another organisation which was created to hold the so-called toxic assets. And what happened with Northern Rock, as with many other mortgage providers, in the 2005-2007 era, they were granting mortgages based on most optimistic valuations of properties. For example, they were valuing properties, they were given mortgages at say 125% of the valuation of a property, and these valuations were optimistic as well. And this really was very imprudent lending, which the Labour government at the time castigated the management of Northern Rock for. But as subsequently transpired, they were not alone in their imprudent practices. Most UK banks have been doing something similar, or even worse. But what is not known is that the government has pumped some 27 billion into Northern Rock since nationalisation. Of this 27 billion, a mere 1.5 billion has been accounted for in the good bank, while the predominant share of some 25 billion resides with the bad bank. So the UK government will continue to administer the bad bank's portfolio of toxic assets, as there's no prospect of selling that to anybody. There's no prospect of giving it away to anybody in the current situation. And the loss, should there be a complete loss on the so-called toxic assets, this, as I said, is some 25 billion, and this per taxpayer in the UK could be as high as £833 per UK taxpayer. So this is really quite an important point. Now, from Virgin's viewpoint, the deal is the successful culmination of several years of behind-the-scenes lobbying, as they did aspire to acquire Northern Rock just before the Labour government deemed it was appropriate to nationalise it in 2008. At that time, Mr. Branson was offering £1.25 billion for Northern Rock. And it should be noted, this was for the entire asset portfolio of Northern Rock, including what we now describe as the bad bank and the toxic assets. So with the benefit of hindsight, when Gordon Brown and Alistair Darling rebuffed Mr. Branson, they were doing him a big favour, because he doesn't want, with the benefit of hindsight, the toxic assets. So I do hope that Mr. Branson will be a forgiving person, and that the least he can do is to send Messrs. Brown and Darling a Christmas card this year. Again, from Virgin's point of view, there is considerable synergy in the deal. Now, synergy, as we describe it in the trade, is the so-called 2 + 2 = 5 effect. So there's quite a good relationship between Virgin Money's existing business and the new business which they've just acquired via Northern Rock. For example, Virgin Money doesn't have high street branches and focuses on insurance and credit card services. On the other hand, Northern Rock has branches in good locations and concentrates on retail savings and mortgages. So the two businesses fit like a glove. They fit very well together. So the deal is definitely advantageous to Mr. Branson and the Virgin Group, because he's getting a good bank and he's not acquiring the toxic assets, which is great. And I'm sure he'll turn it round and do well for the bank. The Chancellor, George Osborne, is also doing well, because he can claim now that he's beginning to normalise the UK banking sector by returning the good part of Northern Rock to the private sector. Unfortunately, as is inevitable and usual, it is the taxpayer who ends up doubting whether his interests have been well served. In the case of Northern Rock, there's also the unfortunate matter that at nationalisation, all the investors in Northern Rock, i.e. the shareholders of Northern Rock, had their share values wiped out when the shares were acquired by the UK government. And this is scandalous. We're not talking about hedge funds and major investors. We're talking about small investors, lots in the northeast of England, who had bought shares in Northern Rock. And there's an ongoing legal battle, which is probably going to go to the European Court of Justice or even the European Court of Human Rights to deal with that matter. So, in the meantime, this is good news for Mr. Branson. He had the unfortunate fire at his island, Paradise of Necker, a few months ago. Hopefully he'll have the island back in shipshape condition for his daughter's wedding, which I understand is coming soon. And in the meantime, if any of you feel inclined to help Mr. Branson, you can stay at his island, I think, for a mere £30,000 per night. I don't have the telephone number, but I'm sure you can find it. As I said, there are lots of aspects of Northern Rock I haven't covered. If you go to our website, which is Wellington Estates, you will see quite a few articles there regarding the history of Northern Rock. And thank you very much for listening to this video.